Hello and a very warm welcome to Inside the Deal. I'm your host, Ollie Barrett, and wherever you're tuning in from, whether you're watching live on this beautiful Thursday morning or whether you're catching up later, thank you very much for tuning in. Thank you for joining us. This series has covered so many different themes, and today we're talking about insurtech, insurance plus technology. What does that mean for an industry which, let's be honest, is hundreds of years old? What does it mean for business models? And crucially, what does it mean for us, for me, for you as customers, the so what factor? Because to put it mildly, these have been challenging and interesting times for insurers around the world. So how do they see the new opportunities faced or presented by technology? This whole event, if you like, and series is brought to you by FinCap Group and by Business Leader as well. By the way, FinCap, the one-stop shop in my mind, whether you're raising money, whether you're listing your company, whether you want to exit your company, and very proud to be associated with this whole thing. The most important ingredient in this is you, your questions, your thoughts. So please fire them through. I can put them to some of the guests. I can see them in my chat box. So without further ado, let's meet the guests. Why don't we bring them all up on screen and I'll tell you who's here. I see them one by one joining us. Good morning, everyone. It's a Zoom world now, so we wave good morning. It's lovely to see everybody. I can see, well, for a start, I can see someone who's often found running around the world, the ever and effervescent Sophie Winwood. Sophie, very nice to see you. Good morning. How are you?
Good morning. Yeah, I'm doing very good. Thank you. How are you doing?
Yeah, very good. Now, Sophie, you are a leading funder of this sort of thing, particularly fintech and insurtech. You're a principal at Anthemis and their investment team, particularly early stage investments. I'm right?
Yes, correct. So we really like to kind of get involved with companies really at the seed stage. So, an idea, a couple of customers, and what we do is we really help them sort of scale that early stage into a kind of more institutionalized sales process and more robust product. And yeah, it's a very exciting stage to be involved.
I'm sure it is. So we want to hear more about what you're seeing, but I'm just going to do a quick whistle stop tour around all the guests so everyone gets a flavor of who's here. Aldo Monteforte joins us and rejoins us. It's lovely to see you again, Aldo. You're the founder and chief exec of The Flow, and for viewers, that's FLOOW. This is about telematics, tracking where things are going so that we can keep tabs on them. How does that then relate to insurance, Aldo? Very briefly.
Thank you, Ollie, and good morning to the audience. It does relate to insurance because the whole purpose of The Flow is really to transform mobility data into insights that improve the understanding of risk, improved the ability of insurers to relate to their end users, develop a level of intimacy with end users that is really only possible with today's technology means.
So we're tracking, Aldo. We're tracking where things are going. Cars, motorbikes, anything else?
Well, we specialize on vehicles. So it's really mostly about motor vehicles and the risk that individuals take upon themselves as they move from point A to point B.
Got it. Very clear. Thank you. We're joined by another entrepreneur, Ben, rather not Ben, I should say, Tom Wynne. Very nice to see you, Tom, the founder of Capsule. Love what you're doing. You're targeting a very particular type of business customer. Just tell us a bit more in a nutshell.
Yeah, no, we are. Thanks, Ollie. So Capsule is an insurance provider to high growth, next generation, often VC-backed startups and scale-ups.
Interesting. And what stage are you at in the business then, Tom?
So we exited our last business in April 2020 that we'd taken through a couple of rounds of private equity and sold to a US-backed insurance business and kicked off Capsule in June 21. And so we're early stage, we're 10 or 11 heads and just kind of plotting our own scale-up journey.
Excellent. Thank you, Tom. So no less digitally savvy. However, let's be honest, Derek, a company founded in the 1920s, Gallagher, one of the leading global insurance brokers. Give us a sense of the business, Derek. You're spanning many, many countries.
Yeah, Gallagher has been around since 1927. We are over 30,000 people worldwide, 39,000, 6,000 people in the UK, in 150 countries. And in the UK today, we look after 1.3 million customers. So
yeah, and just to be crystal clear, for our viewer, Derek, you're the broker, you're the connector, advising and then putting people in touch, holding that relationship, but with a whole multitude of potential insurers.
Yeah, that's absolutely right. That's where we fit into the chain, giving everyone the right advice and trying to find the right insurance packages and putting together for them.
Right, excellent. Thank you very much, Derek. By no means least, from FinCap Group itself, the head of financial services, Ben Goldring. Good to see you, Ben. How are you doing?
Good morning, Ollie. Doing very well, thank you.
I should say, by the way, Ben, 15 years in corporate finance. Since you joined Cavendish, now part of the FinCap Group, you've worked on over 20 deals. Just give us a flavour of that breadth.
Yeah, so across the sort of financial services world, so across payments, fintech, but insurance has been such an active market over the last few years. So recently there's obviously been the flow, which my colleagues worked with Aldo on that, but we also worked on the high growth digital brokerage firm called Hamilton Fraser, which we sold to Global Risk Partners, and a bit of a sign of the times. Global Risk Partners, since in between exchange and completion, have themselves been acquired by the US global insurance firm Brown & Brown.
Yes, no, it's sort of domino effect, isn't it? Thank you, Ben. I'm going to ask you for your big picture thoughts in a minute, but why don't I turn to each of the guests just very briefly, because I think for our viewer, they want to hear, if you could only really say one thing about insurtech on the top of your mind, if you could encapsulate something for me and for our guest. Sophie, what would it be? I want a sort of thought starter as we move into the session, because we've got until the top of the hour, but I want to get the pithiest thoughts in at the top.
Yeah, I think for me, insurtech is really about putting the customer back at the heart of the product. Going away from a kind of a revenue-based metric and really about a customer experience-based.
Powerful, and I'm hearing rhymes with so much that we've learned from the fintech surge over the last few years on that. Tom, what would you say?
Ollie, I've got to admit I missed the question because of my poor internet connection.
Don't worry. If you could say, it's really a big thought starter for our viewer, really. If you could say one thing about insurtech today to get us firing in the brain, what would it be?
That we live in capsule land, high growth businesses. For me, it's the ability to use technology to better serve that customer base in a way that historically, when they think about insurance, they think about kind of something being very kind of cumbersome, outdated, and not necessarily meeting their needs. And it's the ability to keep pace with their growth and their adoption of technology.
Yeah, no, I think that pace of growth is so crucial here. Derek, get us started thinking, because you're at the forefront of evolving this sector, really.
Yeah, I mean, for me, it is all about making it easier for customers that actually want to trade that way. Because you'll always get customers that don't want to trade pure digitally, but there's a lot of customers that do. And insurtech, for me, is all about enabling that to give those customers the experience they really want.
Got it. So I've got questions for you, Derek, about how we humans fit into this. Aldo, your thought starter for us.
Yeah, for me, Ollie, it's very simple. I think insurtech is about making insurance go through the same transformation that other experiences have witnessed. Take music, for example. We used to be listening to whatever music the radio would provide, and then comes Spotify, and you can design the kind of content you want to consume. The same with television and then Netflix. Insurance should be absolutely the same. It shouldn't be a one-size-fits-all. We're all different. It should be a product that calibrates and adjusts dynamically every second to the needs and of the individual and the risk manifested by the individual. So for me, it's all about creating this next generation of highly calibrated and customized products.
Good. Thank you, Aldo. Well, we will be thinking about whether treating everyone in a very personalized way has any hidden pitfalls as we go through our conversation. But Ben, why don't you join me just as a sort of quick sort of overview? Give us your sense, because in a way, you've got the sort of helicopter view. Why is this sector interesting? What's going on? Help us get our head into it.
Yeah, and I thought it was really interesting hearing everyone talk about it. And I think the theme that ran through that is it is an evolution in terms of the tech journey that the insurance world is going through. And it's come on leaps and bounds in the last couple of years. And in part, it's had to, because COVID has forced some different behaviors. But as I think as the other people said, it's still probably, I think it's fair to say, it also lags behind its financial services peers in the adoption of those new technologies. The insurance world is, to a certain degree, still characterized as one where there's large players with fantastic access to really great human capital and expertise, but where they're operating on legacy systems and have a somewhat analog approach to how they capture customers and engage with them. And anyone who's had to try and change their motor insurance policy midway through the year knows that means calling up a customer line and sort of sitting on the phone for 15 minutes and then speaking to someone. I think insurtechs almost by definition have a blank piece of paper in terms of that technology set and how they want to engage with their customers, and whether that be through online digital brokerage piece, AI and telematics and data piece, or sort of greater automation of certain key parts of the value chain. I think there's huge latent opportunities there for them. It won't surprise anyone on this call that where there are huge opportunities, venture capital money is sure to flow. So last year in 2021, globally, we saw more than 40 insurtechs raise more than $14 billion over 600 deals. And that number, that the $14 billion, is itself dwarfed by the $33 billion of VC-backed insurtech exits. So sort of landmark transactions like the IPOs of Hippo, Oscar, Metromile that listed last year generated huge sums of money. So I suppose, what does that mean for us sitting here in 22? I suspect, and I'll be keen to hear from the other members, where they think 2021 is likely to be a sort of high watermark in terms of activity and pricing in the market. Certainly, we have seen a bit of a downtick in activity in the latter half of 21. I think that's carried on into 22. And I think what we're seeing in the market more is a greater pick. So insurtech as a theme, extremely important, but greater pickiness in terms of the players in there, and sort of choosing players with the sort of right technology set. And also, I'd say a greater scrutiny on unit economics and profitability. And almost a case example of that is Lemonade, which is the New York Stock Exchange listed insurtech darling that has lost some 75% of its value over the last 12 months around some of those concerns around profitability. As a point, and maybe we'll return to it with other members, I think how we think about insurance and who provides insurance may well change over the coming 12, 24 months. So I noted that Amazon last year started offering business insurance to its business prime members in the US, and increasingly, and I think Sophie picked up on this on her comments, FinTech and insurtech I see increasingly merging. So some of the neobanks are not only offering insurance products alongside other financial products, but actually bringing those capabilities in-house.
Very interesting. Brilliant summary. Thank you, Ben. Well, I'm going to sort of check in with you throughout. Let's bring everyone back together, sort of round the table. By the way, Sophie, what did Ben miss? Because you've got the helicopter view too. You're writing some pretty big checks into these companies. Anything you'd add?
I think so. It's really interesting. You can look at this as if you'd spoken sort of a couple of months ago at the end of 2021, you'd say, "Wow, what an amazing year for fintech, for insurtech, sort of VC funding, up 105% on the last year, and sort of seeing a lot of stellar stuff." But as Ben alluded to, the public markets weren't, and the exits aren't performing as we'd hoped. And as kind of this is what normally happens is public market kind of decreased valuations will trickle down to private. It takes a bit longer, but we're starting to see that now. We're starting to see hits to valuations of more kind of traditional MGAs. And we
what that acronym means.
So an MGA is managing general agent. So they are not insurance, but they are usually kind of delegated the underwriting of a product because they have a special edge, data or an understanding of the sector. But they still have an insurance or a capacity provider sitting behind them. And so what we were seeing is, even though Lemonade is a full stack, which is they are the full stack insurer, a lot of these new kind of digital insurtechs are taking the MGA model because it's slightly less regulated and it's quicker to market. And if you looked at kind of the Q1 of 2022, we actually saw a 58% decrease in the amount of VC funding into insurtech, which is
globally, Sophie? Do you mean globally?
Globally, correct, yeah. And we're seeing that across...
Why do you think that is?
That will be the kind of two things. One is the public market valuations that are meaning that VCs are stepping back a little bit from insurtechs. While it was a very hypey sector for a while, VCs were kind of piling in, maybe without actually understanding the fundamentals and the differences between insurance models and other models. So that would be the first point. And the second point would be the general macroeconomic climate and the fact that general tech kind of valuations in the public sector are now trickling down. And so while that sounds dramatic, 58%, insurtech is not alone, fintech is down, and global VC across all industries is down as well.
Right. So we can come back to this. I'm going to bring us all back to a point that many of you have already made, which is the customer at the center of this, why it matters for them, why the rise of insurtech is good. So in terms of what you do and how you do it, and we'll start with Tom, then Derek, just take us right to the edge of why this matters for the customer based on what you do and how you do it. Tom.
Yeah, so from our perspective, we're dealing with very, very tech-enabled, tech-savvy customers. And beyond that, they're growing very, very fast. And so our focus has always been around what can we do through technology to better manage that risk. And so as Capsule, we do a number of things. So we track all of our clients on about 300 plus open source data points, so that we can track their progress and their journey. So if there's changes to C-suite, changes to headcount, they take investment. We use that technology, we kind of trigger-based support that allows brokers to reach out and say, we can see that there was this change in the business, and just make sure that their insurance keeps pace with growth.
Thank you, Tom. Give us an example. This is Tom, the CEO of Capsule, an example of a data set that you're drawing on that might surprise a viewer. I don't know if Tom's catching my questions here.
Sorry, Ollie, just one more time.
An example of a data set that you draw on that might surprise us.
Okay, so there will be two. One thing that we're doing, which is very neat at the moment, is using an API to plug into the accounting software that our high growth clients are using, so that we can see in any 1 month how they're trading and make sure that, again, their insurance keeps pace with growth. And it allows us to see, instead of that kind of traditional broker relationship and maybe kind of talking to each other twice a year, we can see if there's any big fluctuations in revenue or in trading in any 1 month, to make sure that we're ahead of it. And the second would be an ESG index we have, where we measure startups and scale-ups based on their ESG-ness and report that to the insurers and look to get those factors recognized and rewarded by the insurers as another factor to consider when looking at the underwriting risk.
All right, so we don't draw the wrong conclusion, what is the correlation that you're seeing? Oh, well, we might just have to post that to Tom in the chat.
ESG credentials should also... So from an ESG perspective, our view is that a business with strong ESG credentials should ultimately claim less often than their traditional peers. Their claims should be less severe. They should outperform SME peers in terms of growth, but they should also fail less than traditional peers.
Well, but I don't like this word "should," Tom. It's confusing me. Is your evidence that that there is a correlation and a causation there? That's all right. It's that moment where we might have to move on briefly. All right, Derek. Let's pause from Tom. Don't worry. Derek, tell us why. Thank you, Tom. Tell us why how you do what you do matters so much for the customer. Why is it so important?
Yeah. So, Ollie, I think that my part of the business, if you is the real digital end of what we do at Gallagher. So, 98% of my customers will start their transaction online. Whether they don't all finish it online, but they'll certainly start.
Yeah.
So the reason for that is, so we've got to try and this is between, you know, for your business customer, it might be vans, or it might be a taxi driver, or you might be in the motor trade. You might have trucks, small fleets, whatever like that. So it's really important those customers that actually know what they want and can trade digitally and buy that product get the service they need through that. We've got tools and techniques in place to be able to take them offline if we think they need the help and talk to a broker, because inevitably, if you own a business and you're trying to get the right insurance, sometimes you just want to talk to somebody and make sure you've got it right.
Right. And what, Derek, what Tom's been describing there is almost the equivalent of being sort of hooked up as a business to a sort of, 24/7 sort of cardiogram, pulse checker. To what extent is Capsule there the outlier as is playing out more broadly across the industry?
Oh, certainly. I mean, what Tom was saying is really fascinating, because if you're a high growth business and you're getting your insurance, you base it on your turnover, you base it on your number of employees to get your business interruption right and things. Maybe your stock cover, depending on what you're trading. So if you're high growth, then that needs to be updated as you go through and report through your broker back to your insurer. So the ability to do that dynamically sounds really interesting. Certainly. If you're more established, you don't quite need it.
Very, very disruptive indeed. Aldo, talk to us about what you're doing at the Flow, now part of a much bigger group, NASDAQ listed, of course. Why it matters so much for customers.
Well, Ollie, I think the example that probably brings to life most clearly the impact from an end user, from a customer perspective, is what happens in the event of a crash. So Flow is fundamentally, even more now, as a result of the acquisition by Autonomo, a data refiner. We ingest data from all kinds of sensors in smartphones, sensors plugged in vehicles. So we are the first recipient of information, of data from these various probes that inform about the manifestation of an accident, of a probable crash of the car. And clearly, it is possible to dispatch help, support in the immediacy of the event, severe crashes that are attended to and dealt with within the first hour, significantly, dramatically improve the chances of survival of people involved, or even in crashes that aren't that significant, the ability to very quickly establish what happened, apportion blame, reconstruct the event, effectively improve the entire first notification of loss part of the insurance experience. That is really, really meaningful and important. Yes. There is much more, but I think intervening when people need it the most is one of the highest and most important, I think, advantages of connectivity that I can think of.
Yeah, thank you, Aldo. I mean, Sophie, it's very clear how some of these technologies change the relationship with the customer. For a startup that you're investing in, that might not mean great revenue, great profitability in those early stages. However, if they go on to get acquired by one of the big players, then that's a good result for you. So to what extent are you focused on those short-term gains?
So I think creating a product that customers love leads to a lower acquisition cost. And if you look at insurers, sort of traditional insurers, that's one of the biggest costs to them, is acquiring customers. Yes, once they get them, it's a very sticky product. They tend to kind of stay, although kind of price comparison websites have sort of mitigated that a little bit. So I think what we look for is either a new product type, so a completely new product type, which has never been designed before to kind of manage these risks that aren't looked at before, or a different type of distribution. And that's where we're seeing this embedded insurance theme, which is really, as a customer, no one wakes up in the morning and thinks, oh, I want to buy insurance today. They think about the risks, like, oh, I really hope my boiler doesn't break down. I really hope, that my car doesn't get damaged. And so how do you create these products where it almost feels like the customer isn't buying insurance, they're buying protection, and it's more of a holistic sort of preventative approach rather than we're just going to be here when things go wrong?
I understand. Okay, so what is your view then? And by the way, Tom, hopefully we can get a better line to you. You were making a fascinating connection between the ESG-ness, your word, of a business that you're potentially going to insure, and its likelihood of claiming, its likelihood of running into significant you using the word should. A business who scores highly should claim less. I'm trying to understand if you've evidenced that, or that's still a working hypothesis. Yeah, well, here's my lesson.
ESG in the startup space has actually come from the VC world, and clearly the LPs behind the VCs pressure around ESG and where capital is being invested. And insurers have been under a similar pressure in terms of how the insurers like an Aviva invest their capital and making sure that it's not in carbon intensive industries. But it's been a lot slower to come through to the underwriting side of the world in terms of the insurers looking at the way that the businesses that they're underwriting, especially at SME level. But there is a growing acceptance and awareness that there are links between ESG and business performance and business risk. But at SME level, very much traditional metrics are still used when assessing risk with underwriting. You're looking at turnover, you're looking at location, you're looking at industry, headcount. But actually, if you assess the ESG-ness of a business, and we're actually doing some work, Ollie, with Aviva at the moment, looking at the B Corp population. So we became a B Corp yesterday. So we'll announce it next week. But we looked at the population last year with Aviva versus the traditional SME population, and it proved out this theory that these businesses do claim less often. The claims are less severe. They outperform their SME peers in terms of growth, but they also fail less.
Yeah, that's very helpful. And Ben, why don't I ask you Ben Goldring?
And at the moment, that's just not recognised and rewarded.
Noted. And Ben, I wonder to what extent that plays into a wider theme from investors about what they're really looking for and potentially looking to measure.
I think there's been a lot of fascinating points here. So I guess the two that I draw out are the points around data. So Aldo was talking about connected devices, and Tom's been talking about ESG. And I guess what we've seen is there's a huge amount of data out there, and it's around it's not around just the collation of it, but it's around structuring it and being able to develop actionable sort of deeper insights that have some sort of predictive ability to them. So I think when people can both collate that data and develop predictions, behavior around it, that becomes extremely valuable. I do think I think Derek's point earlier was also really important around today's discussions about insurtech. But you may have seen Assured Partners picked up a business in the south of Ireland, absolutely cracking business called GMIB, which I was a buy-side advisor for an unsuccessful party on. And that business was to certainly be loud and proud about the fact that it had an analog approach to its customers. Yes, people started their journey online, but speaking to customers and getting data that way was incredibly important to them for risk rating.
So why don't we try and zoom into that? Thank you, Ben. In terms of the interaction with the customer, ultimately, this is about a human being, certainly on the customer side for now. Derek, how do you see that evolving? Frankly, the first time, if I go to a challenger insurtech company, the first thing I expect to see is a chatbot, which is probably an AI. Help us see into where it's going.
Yeah, I think the future looks like, and certainly at the kind of micro end, less so in the corporate insurance end, I think, but certainly in the micro end, you want to be able to do this on your phone, don't you? So customers want to be able to actually choose the time they engage with their insurance, and typically if you're a sole trader or whatever else, you want to do it 8 o'clock at night after you've finished working for the day, actually earning the money. So it's got to be able to fit to those needs. I think that's ultimately where this goes. Yeah.
Well, if I may, Derek, I'm asking a slightly different question, not about 24/7 access, not about what choice your platform might be. It could be a Facebook chatbot, it could be WhatsApp for all I care. I'm talking about humans, and versus is going to get me into trouble, but as opposed to AI, robots.
Yeah, I mean, I think it's, I guess the question you're asking, but it's about how do you get, actually, as a customer, how do you get the outcome you want, right? So you want to be able to advise of a change on your vehicle, on a fleet policy or whatever else. You want to be able to do that easy. Now, if you can do that via an AI chatbot, you'd be quite happy to do that, wouldn't you? Because if it's easy to do, why wouldn't you want to do that? Yeah. But it might well be more sophisticated, and you might want to talk to somebody. So I think it's important to realise there's two ways of eating this.
Yeah. And I think the crucial thing, you've got over 30,000 colleagues around the world in the business of advice. And that takes us into a different sphere, doesn't it?
Yeah, it very much does. And that really goes with scale, primarily. Big businesses, you're going to want to talk to somebody. It's always this complexity, really, that adds the need for the advice and face-to-face.
So what's your take on this then, Aldo? The role of the human in insurtech. Obviously, talent for you, taking people into the flow, but what about on the interaction with customers?
So, the interactions that we imagine are going to be most successful are smartphone-centric and exquisitely digital. We imagine and help insurers imagining products that behave like Revolut, for example, where you can organize very efficient exchange rate transfers at zero cost at any time, day or night. You're completely in control as a user through an exquisite mobile interface. Why should it be different from an insurance standpoint?
All right. So with an example there, then, Aldo, if I say, well, look, I'm trying to insure my house or my car or my business, and what I'd really like to do is speak to a real person, to what extent are those days behind us?
No, I think that dimension will never be completely eliminated and should be kept in place for those consumers that are in need of that type of interaction. And from time to time, by exception, those interactions may be necessary. But I view them more as exceptions rather than the rule, because the interface will be so exquisitely simple and advanced and friendly that the necessity to deal with a human being will be eliminated by and large.
Well, that could pose some interesting thoughts for colleagues on the panel. Tom, can you hear me, Tom Wynne?
Yeah, I can.
Thank you. Tom, how is Capsule approaching this? Where, if at all, is the human interface with the customer?
Yeah, I think we're in a similar world to Derek in a way, in that it's absolutely fine when you're dealing in micro business and tradition, kind of true startup, to transact online, transact through the smartphone. But a business does get to a point in their evolution where they do need advice. And I think it's finding a real blend of being led by data, but being powered by humans, in our world anyway, whereby the client doesn't want to be talking to an insurance broker. They're a high growth business. They've got lots of other things to be doing. And so we use technology to replace lots of the conversations we would otherwise be having with them if we were operating in a traditional way. So instead of having to have regular check-ins, we check their we track their head count, we track how they're performing month to month, we track their socials, their news articles, anything like. We use technology for that. But at the point that it requires a human to go in and have a conversation with that CFO and talk about future ambition, because it's very hard to use technology and data to determine future ambition and where this business is going to be.
Understood.
Expand. So that's when there's a need for a broker with a real understanding of the space.
Okay, I get that point on conversation. I guess the thorniest question then is, to what extent can an AI, a robot to use a shorthand, give advice? And that's for you, Tom.
Okay, yeah, I mean, that is a tricky question, Ollie. I guess in Capsule land, there becomes a point where at this point in time, we absolutely need that really educated broker with a full view of the market that's been there and done that. In time, can some of this be replaced by AI and robotics? I'm sure it will, but I do think there is a certain part of the market that I think Gallagher and Capsule at the top end play in that will always require humans, or at least for kind of the next 10 or so years at least.
All right, now let's move on, because we've got questions coming in. Let me put this one to you, Sophie. A viewer is asking us about insurtech as a whole. Is it the natural progression of the insurance industry, or is there a role for both? So it's sort of, I guess, a sort of Venn diagram question, really, isn't it, about where it all sits?
Yeah, I think that's a really interesting question. I tend to kind of draw analogies here a little bit to fintech, which is at the start, we saw this huge kind of burst of competition, beat the banks. We want to build a new banking system. And then what a lot of these companies quickly realized is, well, the banks have the regulatory understanding, they have the historical knowledge, and they have the balance sheets. And I think we're seeing that it's actually a bit more closely aligned with insurtech, because a lot of these companies need insurers for capacity providers to kind of launch their initial products. So I see it as absolutely don't see the kind of what we saw traditional insurance businesses going anywhere. I see a lot more of collaboration and kind of using these new insurtechs to kind of more efficiently distribute, more efficiently price. A lot of the insurtechs that we are looking at is actually back end sort of automating claim processes and stuff like that. So I think we'll just see a kind of intermingling with sort of pockets of innovations and kind of pure competitors like Lemonade sort of popping up alongside it.
Interesting. Well, kudos to Capsule, by the way, on becoming a B Corp. I think that is a business leader scoop for us today. Lemonade, indeed, another B Corporation. Fascinating example. Okay, well, who will help us address a very thorny issue? Tom from Capsule has already told us about them accessing over 30 different data sets, hoovering in that information to provide a better service. So how do we get the balance right between data and intelligence, not tipping over into surveillance that's not wanted, not appropriate? Who will help us navigate this? And I want to keep coming back to the customer in the center of this. Aldo.
Yeah, sure. And it's a super delicate topic, and one that we spend a lot of time thinking about all the time. And fundamentally, I think it has to be a voluntary, optional choice by the consumer. There is no way that products like those I described, that fundamentally base themselves on the connectivity between user and carrier, insurance carrier, would ever be made compulsory for users. I don't see that happening anytime soon, and it shouldn't happen. So from our perspective, the question is, how can we make these products so much more friendly and additive to the quality of life of individuals, because they help people save their lives, they save money because you can get priced more fairly, they save your time because it's all digital and exquisitely smartphone centric, that people want to consume them. Right. And that's the only way is to make them.
The challenge, forgive me, Aldo, the challenge is that in the world of telematics, so tracking where something is going, a company could be able to know where I'm going, how fast I'm going there, who I'm going there with. And a concern that a viewer might have is, doesn't all this just get buried in the small print? And a breakdown of trust is a big risk.
Yeah, I mean, bear in mind, Ollie, that this information is already sitting out there, even without necessarily having bought a telematics product, because every telecom operator that you subscribe has that information already in their servers.
Yeah, well, it can't use it to change how much it charges me.
Exactly. So the only scenario where I see this happening is where the consumer is properly informed, as he should be, because that's the law, and it is made completely transparent,
Yes.
and used not so much to penalize individuals. Most insurance companies that are, with some exceptions, of course, that are using our technology are using the technology not so much to penalize, say, the riskiest users in the distribution. It is to reward the good ones.
Yes.
And make them more loyal, stickier as consumers, because ultimately, what's the dream of every insurance company is to have great customers that pay a premium and don't claim.
Isn't that all just about marketing and how you frame it? If you've incentivized one group of customers, then by definition you've penalized the other half or the other lot in relative terms.
Yes, that is correct, and particularly in very competitive insurance markets like the UK, there is a huge amount of pressure on carriers, on all participants in the market, to try and find the best possible risk.
Got it. So thank you, Aldo. I want so much more from you on this, but I want to bring others in. Does anyone else have a view about how we harness data in positive ways, and avoid some of these bigger risks? Will anyone give me an offer on that? Because you're all trying to wrap your heads around it. Please, Derek.
Yeah, and I think it's and insurance is covered in data. I mean, it is it's the lifeblood of the business. Even if it's not quite as sophisticated as Aldo's business with some of the telematics, it's there in risk data. And really, it's about knowing as much as you can about the customer to give them the best price you can. And that's the difference between a broker and an insurer is we're interested in covering everybody as a broker and helping them, whereas insurers are very specific about getting the data they want to get the risks they want.
Yeah.
And that's the difference. So information that we can gather as a broker that helps us get more information about that customer, that can make their price better for them and get the right cover. That's the game.
Okay, so well, help me out, everybody, on this. Sucking up lots of information about your customer so that you can price, in this case, risk for them, and personalize that service. We can hear about the positives of that. If we take that into another industry, that is discrimination. That is the definition of discrimination, because I'm making one decision about one customer, charging them a different price based on who they are, where they're from, where they live, what their background is, in a way that just wouldn't be tolerated. So will anyone help me navigate this? Because it feels like strange waters. Aldo, I see you have something for me, but
yeah.
Tom, well, forgive me, I'm going to pause briefly, but I want to bring others in. Tom, help us navigate this, because it wouldn't be tolerated in other industries.
No, I think when you look at it in that context, I think that's right. I think as Derek said, in the insurance market, though, you've always had and always will have insurers led by data with a certain appetite, and it is that broker's risk in the commercial insurance world to find a home for that risk, and ultimately most brokers most of the time should be able to find an appropriate home. I think there is just that real focus on how the data is used and making sure that it is used in an appropriate manner. But from a capture perspective, we have a very, very kind of core focus of what an ideal client looks like for us. But there is an acceptance that there will be a mix in the book, exactly as Aldo talks to. There might be a preference around a certain customer. There might be an ability to give them preferential rating based on ESG metrics,
Yes,
or the fact that they've plugged in. But and I think
that's the issue, Tom. Carry on, Tom. Sorry.
But I think there does have to be that you need to distinguish between a preferential rating from standard to that of actually negatively discriminating the other clients. It's very much kind of the data allows you to get to a better place than you otherwise would have been able to, I think, rather than penalizing necessarily.
Yeah, and I think Capsule's approach there is very thoughtful. Sophie, we've seen this, haven't we, across FinTech, that data leads to people being left behind, people being unbanked. How do you tackle this, or have I overblown it?
No, not at all. But I think that's the, where there is underserved market, there is the ability for companies to come in and sort of provide products for that sort of underserved market. And I think that's where the technology comes in, because the reason why they're historically underserved is because insurers have very large cost bases, and it's unprofitable for them to target these niche kind of product customer segments. And so while I think it can be dangerous, and that's where I feel like the regulation is going to play a very big part. We would already see it in car insurance, for example. Now you can't price based on gender, and I think we'll be seeing a lot more of that come in. I think what we'll see is companies and insurers and insurtechs targeting these niche to be able to provide these products fairly and without being discriminatory. But it's going to take time, and there's going to be some missteps because regulators can't keep up with the depth of data.
How do you so how do you feel about that? Does anyone have a view on this? Aldo, why don't you come back in? Because if I can prove, and by the way, I think I probably can, that older women tend to have fewer accidents and make fewer claims, then why shouldn't they get a better deal?
So I think that there is a generalized trend whereby regulators are trying to root out discriminatory biases that are baked into rating plans across multiple jurisdictions. And the very interesting case is what's happening in the US. Stateside regulators are fighting to remove credit score from how you price insurance. And maybe unbeknownst to most people, maybe in the audience, credit scores are used by insurers to determine how much you pay for your, for example, auto policy. Why? Because it correlates really, really, really well with propensity to claim. Now, how discriminatory is that? Rich people have less accidents than people with poor credit scores. So what is, what we see is a great deal of support by regulators for solutions like ours that say, we don't care about your credit score. We don't care about your gender. We don't care about your religion. We don't care about anything other than how you drive, because that's what we measure. So I think that technologies that look at behavior and manifestation of risk are effectively countering and supporting the, I think, very rightful push to remove discriminatory bias from rating plans.
I mean, this could be a whole hour in itself, couldn't it? Very briefly, before we move on, Derek, have you got anything to add to this? By the way, I should say Gallagher acknowledged over very many years as an ethical broker and ethical provider, literally award-winning. Give us your take.
Thank you. Yeah, we're extremely proud of that. Our ethical status. It's this is all about pooling of risk. I think that we have to remember that basically what we do, we're all contributing to a fund and paying a small amount of money so that the people that do have to claim can get covered and continue doing what they're doing. And there's two ways to do it. Either everyone pays exactly the same amount into the fund, or the people that claim less pay less and there are better risks, and the people that claim more pay more. And then there's various sophistications from that. So for me, it comes back to there, and I think what Aldo says is right, that kind of blending out things that's purely discriminatory versus what's actually driving risk it will continue, I think. But ultimately, that's what we're trying to do.
Got it. So what we're going to do, we're going into our final sort of 12 minutes together. I've been trying to put some questions as they've come through to you. So we're going to go quite quick fire on some very big topics. So forgive me. Relationship with the customer in terms of who will be the big players in this space. We heard about Amazon earlier. I really want your sense of that. Of course, Tom, you're going to say capsule, but give us a bigger answer than that, because ultimately insurance boils down to trust.
Yeah, I think you're right to reference the likes of the Amazons of this world, and we've spoken about Revolut, who clearly kind of building some kind of insurance ability there. And I think what Sophie said to me is a big opportunity and threat, depending on what player you are in the market, which is that point around embedded insurance and insurance suddenly being offered by non-insurance brokers and not necessarily insurance carriers. And it might be your bank, it might be your legal firm, it might be any host of advisors. And there's a good analogy that I heard recently around embedded insurance, which is that kind of, would you like fries with that when you're buying something, whether it's an airline ticket or something, or it's the cheese within the cheeseburger bun, which can't really be detached. And there's a real growth, and will continue to be a growth in that, where people don't even necessarily know that they're buying insurance specifically, but it's bundled into something else that is important to you.
Right, interesting. So Ben, if you look at back to your radar screen, who are you seeing, or do you think will be the big emerging players? Maybe we need to make a bigger table.
I think some of them have been mentioned already. I think, you know, the likes of Apple, if you see what Apple are doing in the sort of broader fintech space, you know, with their acquisition of Credit Kudos, which is a credit scoring company using open banking technology, I think that's extremely interesting. And just talking about open banking for a moment, you know, I have an open banking app, and I bought a mobile phone recently, and it's prompted me to buy mobile phone, you know, gadget insurance for that phone. And I think it comes back to that point around the distribution channels. I think may dramatically change over the coming years, and it'll be interesting to see who the sort of winners and losers are, and whether there's partnerships or whether those are developed internally, those capabilities.
Yeah, and back to those diagrams, Sophie, presumably under open banking, and this is not just saying that banks should, but that they must have open APIs for other people to build upon, if you like. Presumably that could be a potential goldmine for insurtech companies.
Absolutely. We've already seen a couple of companies starting that. They're kind of building APIs. It is a lot more complex because of the different lines of business and different insurers. And also you don't have this regulatory driver. But yeah, we absolutely see that playing a big part in the insurtech market going forward, and then building on top of that.
So this is quite interesting news for you potentially, Derek, at Gallagher, because at the moment you've got this sort of ocean of brokers that you're leading people to and guiding them and advising them. To what extent are they going to be joined by some very different flavors of player?
I think it goes back to people need good advice and need to know where it goes, and that's different depending on what kind of product you're buying and where it is. And from my view, the new players that come up are always very focused on specific niches. A bit like Capsule's a great example, you know, focused on kind of high growth businesses. You know, you can't go to Capsule if you want an established business, probably wouldn't work the same. So there's always, in our market, it's been here for hundreds of years because it evolves and different things happen. But there's a lot of around established players having to keep up pace with meeting customer demand and giving them what they want.
Yeah, I guess my question isn't so much around who will your competitors be. It'll be that the connections of the future that Gallagher makes might be to Apple or others, or presumably that's a redundant question because they're all going to go B2C. I mean, I'm just trying to understand who the players in this space are going to be.
Yeah, I think it's a big question. I'm not sure there's I think we had the answer to that. I could probably retire if I definitely had the answer to that. But I think it is the players, again, for me, it just all comes back to about giving the customers what they want, and it's different products in different sectors, and it won't be one player does everything. You know, we're lucky here at someone like Gallagher because we cover the whole market, you know, right the way from covering individual cars right the way through to big reinsurance contracts. So, you know, it's very different. It's very product specific about who will win in what particular places for what type of customers, I think.
No. Got it. Okay, so our final 7 or 8 minutes together. Very, very quick fire, short question, short answer. Aldo, you've exited your business. Congratulations. Single biggest thing you learned about being acquired by, in fact, NASDAQ listed, but Israeli US company. Biggest lesson learned.
Well, I think it's probably too early to talk about lessons learned about being acquired. This is a transaction that we pursued with great determination. We felt in the journey with our partners at Cavendish that a pure private equity or growth capital solution wouldn't be sufficient to fulfill our ambitions, and we opted for a strategic transaction. It was 3 months and a half, very quick time frame. And so maybe a takeaway is if you find the right partner, you can do a deal in a mutually committed partner. You can do a deal very quickly, even against difficult time frames. We announced the deal 4 days after Russia invaded Ukraine, so it wasn't the easiest time.
No, good. So sort of kudos to FinCap Group and Cavendish for their support on that. Tom, super quick fire. We could spend an hour on this answer, I know. To what extent can insurers be in the business of encouraging entrepreneurs to take risk? Oh, Tom, you just come off mute for me, I think. Now, Tom, I think you're on mute.
Yes, thanks, Ollie. So it's a good question, and I think for what it's worth, the insurance market, I think, are good at this, are looking at emerging risks, emerging industries, and maybe not necessarily insurers, but that is the role of the brokers and the insurtechs to look at an emerging risk and try and find solutions. And I think they absolutely can be. I think if a startup, scale-up, VC-backed business has got the confidence that they've got the right program in place and the right support, and they've got the supportive partners behind them, it should give them the confidence to expand into territories they may not otherwise, to sign contracts that they may not otherwise.
And any concern, Tom, with the "do you want fries with that" analogy, that insurers could prey on our fears? We're a more fearful society in the wake of a pandemic. I see you've just bought a scooter. Are you sure you don't want insurance for that, for your little child?
Yeah. I think there is always that risk. I think when you get into embedded insurance, it is important that the consumer understands they are buying, that there is insurance in there, and they understand when they can claim on it, when they can't claim on it, who the relationship is with. So there definitely is a duty and a responsibility to whoever ultimately is transacting, whether it's hidden and embedded or not, in making sure the consumer understands the extent to the cover and how and when they can claim.
Yeah. So in closing, give us a glimpse of what we can expect. What's next, if you like? Sophie, you're evaluating a lot of investments. Give us your 2 cents on this, and then we'll ask others. But I'll ask you to be very pithy in this final remark. Thank you.
I'm just going to say embedded finance coming from various different players, embedded insurance products.
And what about sense of the unexpected? Any type of organization that we could expect to offer insurance that we might not have thought of today?
I actually think the combination of open banking and insurance hasn't really taken off yet. Like we saw kind of Uber and GPS kind of come out of nowhere because of those two technologies. I think we'll see something interesting come out of that. I just don't know what it is.
Interesting. Derek, a glimpse of the future from you, please.
Yeah, I think Sophie called it earlier on. I think it's insurance companies taking a more digital, we would call it digital rather than insurtech, but taking a more digital approach and adding digital capability into servicing their customers better. And I think you'll see that run at a rate of knots.
Yeah, 100%. No, thank you for leading on that. Tom, briefly, then Aldo.
Yeah, for me, an area of real interest is revenue-based insurance. So insurance based on in-month revenue, and that can kind of spread in commercial and personal lines rather than that kind of projecting forward and paying annually is in the B2B world and commercial world, that move to revenue-based insurance and kind of on a monthly basis. Really interesting, and I love it. It's almost biometrics for the business, isn't it? Very interesting. Aldo, briefly, a look into the future.
So my dream is a universal insurance product, like a technology-based protector that understands my lifestyle, that follows me, that protects me when I'm swimming, when I'm cycling, when I'm driving, and calibrates to my personal necessities. That's the future. It's a powerful vision, brings us back to that thought about trust. So thank you to all of our guests. Massively appreciated. Aldo, Sophie, Derek, and Tom. Ben, a final word. Why don't I just bring Ben up just for our final minute for some final thoughts. Ben Goldring, tell me what your reflection is on this session. It's been a packed hour.
I think it's been absolutely fascinating, and I think it's been interesting to see sort of almost the consensus around where this is going, the merging of fintech and insurtech. Some acknowledgement that probably 2021 will remain a banner year for time to come. And in terms of my sort of thought on the future, I'm interested to see whether there's more strategic acquisitions of large insurtech startups and fewer IPOs in 2022.
Yeah, really interesting. Thank you to you and all at the FinCap Group for all that you do to support these very ambitious entrepreneurs. We've run out of time on this time's Inside the Deal. Thank you for being our guests, and my huge thanks to all of our guests. That was Ben Goldring from FinCap Group, Aldo Monteforte from The Flow, Sophie Winwood from Anthemis, Derek Henry from Gallagher, and of course, Tom Wynne of Capsule. I've been Ollie Barrett, brought to you with the support and collaboration, of course, of FinCap Group and our partners at Business Leader. Thank you. This has been Inside the Deal. And until next time, goodbye.